Welcome to the Free from Wall Street podcast, where we share how we have done over $200 million in real estate deals to create, preserve, and pass on generational wealth without the roller coaster ride of the stock market. If you're ready to start investing with purpose, visit freefromwallstreet.com. But for now, let's dive into this episode. So welcome back to the Free from Wall Street podcast. My name is Steve Libman. I am your host. Today, I am excited to talk to you a little bit about how are we protecting ourselves and our investors through, what could be a pretty volatile season with increasing mortgage rates, increasing inflation. Clearly we have some economic hurdles that we are going to be dealing with over the next, however long, right? We certainly have some things to watch out for, which as an investment advisor, that's our job, right? We're supposed to be making sure that we're hedging against these risks, and there's ways to do that. But the first thing I want to talk to you about is, as we launch our fund, there's a lot of accounting that goes into this, right? You have different people coming into the fund at different times. They're buying into different assets. The funds are going in, they're coming out. Like, how are we accounting for all of these things? So there's a couple ways to do that. You can, one, hire a team of accountants in-house and make sure that they're doing the bookkeeping and they're doing all of the accounting and issuing the K-1s and things like that. Or, and this is what we've decided to do, and I think it's a little bit safer, in terms of just having more eyes on it, right, is third-party fund administration. So we've elected to use NAV. You can go to navconsulting.net to find out more about them. They have 1,900 funds that they manage. They have over 1,800 clients, 18 or 1,900 employees. They have over $200 billion of assets under management. So they do a great job. They do our fund accounting for us, which is administrating and accounting for pass-through entities created for tax benefits. So if you're an investor with us, you know that you get pass-through tax benefits from depreciation on these real estate assets, but you have to account for that stuff, right? You have to figure out how that gets accounted for each share of the fund and then how it gets passed through. So they do the fund accounting and administration for these pass-through entities. They handle the joint venture real estate deals. They do the accounting and monitoring of escrow and deposits. We take earnest money deposits and good faith deposits. So they have to manage all of that. They prepare fixed asset and depreciation schedules for us, and then they calculate and administer the waterfall, which is essentially how you get paid and how we get paid within the fund, right? What I love about them is they give us daily reporting for available cash. They give us monitoring, tracking, and reporting of the rent income and receivables and when lease maturity dates are coming up. They do the property level information at the fund level. So what that means is that as an investor in the fund, you can see the property level information. And then it gives us a lot of flexibility to configure and send additional customized reports with the standard quarterly reporting package. So they're doing quarterly reporting on financials that gets given to all of our investors. So it's just really helpful with onboarding new clients. They help us with the wiring and managing of the bank accounts. And then from an investor standpoint, they prepare unaudited financials. We also do third-party audited financials, which is another piece of this protection that we're talking about, is on an annualized basis, we're doing audited financials, mostly found with like big institutional firms on Wall Street that do this. And it's just to have a third party come in and audit the financials of the fund. But we do that just for transparency for our investors as well. So really excited about kind of what the real estate fund third-party accounting helps us do in terms of giving the best, most robust product that we can to the client, which is you or somebody that you know that's investing with us. So the other part of that is, do we do third-party audited financials? Yes, we do. And a lot of people always wonder, like, if I don't have audited financials, or if you're internally auditing your financials, how do I know that I'm getting the right numbers? How do I know that I'm getting the right information? And that's important to know, right? So this level of transparency costs a lot more money, but it is so much better for the investor so that they have complete transparency about where money is flowing and how the fund is operating and what's the liquidity of the fund and things like that. So all very good stuff in terms of like how we are setting ourselves up for success. And then, so in terms of third party administration, as you may or may not know, the fund offers a direct reinvestment plan, or DRIP, which means as you get monthly or quarterly dividends, you don't have to take them back as the dividend cash payment. You could roll that right back into the fund so that you can purchase more shares with every monthly or quarterly dividend check that comes in. And why is that important? Why is that cool? Because compound interest, right? So previously in our deals, you would purchase a deal with us. We'd operate that deal for 5 years. And then you would get your returns, some through the cash flow and then some at the exit of the property. But you would realize your entire gain at the end, right? Half of your proceeds at least would come at the end of the deal, which means you'd have to wait to compound that money. Here, for whatever the preferred return is, you get to compound that monthly or quarterly or whenever the dividend comes, which over time will give you significantly better returns because compound interest is the eighth wonder of the world. So we think that is pretty cool, but comes with its own set of accounting issues, right? So if we have 500 investors and they all came in on different dates, and then their dividends are getting paid out on different dates, and some of them want to reinvest and some of them want to take the cash flow because they're investing in it for cash flow, then it's just important to be able to delineate and manage all of those accounting processes. And to do that in-house would be extremely laborious, right? So you could do it in-house and pay accountants, or you could do it as a third party and then get the audited financials every quarter. So just wanted to give you guys a brief update on kind of how we're insulating ourselves and our investors on downside risk with third-party managers, third-party audited financials. If you find this interesting, let us know. Make sure you're subscribing, sharing the podcast with your friends, your family, whoever you think might gain value from this. This is a little bit of an operational topic, so maybe not as sexy as some of the other things that we talk about, but for us it's very exciting because the operations of how the fund works is everything, right? Everybody could talk about drone videos about the real estate that they're buying and how sexy a 400 unit apartment complex is and why the economics of this Phoenix market are going out of control, but at the end of the day, managing the money and how it moves to and fro and how the investors are made safe through these third parties, I think is huge. So hopefully you gained some value. Thanks for tuning into the Free from Wall Street podcast, and we'll catch you next time. See ya. Thanks for listening to the Free from Wall Street podcast. If you like what you hear, leave us a rating and review and let us know what you think.